The Gold Standard, a comprehensive guide to Newmont Corporation, NEM. In the global financial landscape of January 2026, theme names command as much respect in the commodities sector as Newmont Corporation, ticker NEM. As the world's largest gold miner, Newmont is often viewed as the central bank of mining stocks, a company whose performance serves as a primary indicator for the health of the entire precious metals industry. For an investor looking to enter the gold market, Newmont represents a bridge between traditional equity investing and the physical security of precious metals. This guide provides a deep dive into the company's operations, its 2026 financial standing, and the critical risks you must evaluate before making an investment. 1. What is Newmont, the world's mining titan? Newmont Corporation is a global industrial empire. Headquartered in Denver, Colorado, it holds the title of the world's leading gold producer and is a significant producer of copper, silver, zinc, and lead. Crucially for stock market investors, Newmont is the only gold producer listed in the S&P 500 index. A global footprint of Tier 1 assets. As of early 2026, Newmont's strategy is defined by its focus on Tier 1 assets. In mining, a Tier 1 asset is a mine that produces over 500,000 ounces of gold annually, has a lifespan of at least 10 years, and maintains costs significantly lower than the industry average. Newmont's portfolio is spread across 5 continents. North America, massive operations including the Nevada gold mines, a joint venture with Barrick, and Cripple Creek and Victor. Australia, anchored by the world-class Boddington and Tanami mines, and the high-margin Cadia and Lihir operations. Africa, key strategic operations in Ghana, specifically the Ahafo North and Akyem mines. Latin America, significant polymetallic production at Penasquito in Mexico and Yanacocha in Peru. Papua New Guinea, essential assets gained through the historic acquisition of Newcrest Mining. 2. The 2026 context. Why gold is shining now. As of January 16, 2026, gold is trading at historic record levels, frequently testing the $2,300 to $2,500 per ounce range. For Newmont, this macro environment is a perfect storm of profitability. The leverage effect. When you buy Newmont stock, you are buying leveraged exposure to gold. If the price of gold rises by 10%, Newmont stock often rises by more. This is because the company's costs to dig the gold, known as all-in sustaining costs, AISC, remain relatively fixed. In 2025-2026, Newmont's AISC is approximately $1,450 to $1,600 per ounce. Every dollar gold trades above that mark contributes significantly to the company's bottom line. The 2025 performance. Following the integration of Newcrest Mining, Newmont stock saw a remarkable run. Over the past year, the company has capitalized on record high gold prices and its newly expanded Tier 1 portfolio to achieve superior profitability metrics, leading to a recent price surge toward $114 per share. 3. Financial strength and market data. January 2026. Newmont enters 2026 with a robust balance sheet, having aggressively paid down debt following its major acquisition. Key financial metrics, estimated January 16, 2026. Market price, around $114.04. Market capitalization, over $120 billion. Free cash flow, reported record quarterly free cash flow of over $1.5 billion in late 2025. Net margin, currently sits around a healthy 33%. Price-to-earnings ratio, approximately 17.7x, which many analysts view as reasonable given current gold price forecasts. 4. The dividend policy, stability over volatility. Newmont has transitioned to a more stable dividend framework, designed to provide consistent returns even during fluctuations in commodity prices. The quarterly distribution. The company currently pays a quarterly dividend of 25 cents per share, which totals $1 annually. Based on its current price, this represents a yield of roughly 0.9%. While lower than the double-digit yields of some tech companies, it is considered one of the most secure, base dividends in the mining sector. Shareholder returns. In addition to the cash dividend, Newmont has utilized its massive cash reserves for share buybacks. By reducing the total share count, the company increases the proportional ownership and earnings per share for all existing investors. 5. Operational innovation. The mine of the future. Newmont is a leader in mining technology, MineTech. By early 2026, the company has implemented several cutting-edge initiatives. Autonomous haulaging, using self-driving trucks at its Boddington mine to increase 24/7 efficiency. AI-driven exploration, utilizing machine learning and satellite imagery to identify new ore deposits with greater precision. ESG leadership. Newmont is an industry leader in environmental, social, and governance practices, aiming for a 30% reduction in greenhouse gas emissions by 2030. 6. The risks. What every investor should know. Mining is a brutal, capital-intensive business with several unique risks. Commodity price volatility. Newmont's profitability is slave to the market price of gold. A 15% drop in gold could lead to a 30% or more drop in the stock price.
Geopolitical and regulatory risk, operating in countries like Ghana, Peru, and Papua New Guinea, means Newmont must navigate complex local politics, tax changes, and resource nationalism. Operational hiccups. Mines are massive engineering projects. Labor strikes, landslides, or technical failures at a processing plant can cause production to stop for weeks, as seen previously at Penasquito. 7. Investor strategy. How to approach NEM. If you decide that Newmont fits your portfolio, consider these strategies for 2026. The anchor position. Many use Newmont as a core safe haven asset, making up 3% to 5% of their total portfolio. Dollar cost averaging, DCA. Because gold stocks are volatile, buying a set amount every month is often safer than a single large purchase at the 52-week high. Watching the 200-day average. Conservative investors often wait for the stock to dip toward its 200-day moving average, currently around $82, before starting a new position. Conclusion. Is Newmont right for you? Newmont Corporation enters 2026 as the undisputed heavyweight champion of the mining world. It offers a rare combination of Tier 1 asset safety, technological leadership, and disciplined capital allocation. If you believe that global uncertainty and inflation will continue to support high gold prices, Newmont is arguably the best managed vehicle to capture that trend. However, always remember that mining carries risks that paper assets do not. Invest with a long-term perspective and ensure your portfolio is well diversified.